Welcome to our weekly Forex market analysis call, and this is for trading for the week of April 9th to the 13th, 2018. Just a quick disclaimer before we get started. Trading is a risky business. Please be very careful with your money, and this is for educational purposes only and is not intended to be specific investment advice. As usual, we'll start off by taking a look at our Forex factory calendar here and see what's coming up for the week here. Starting the week off here, Monday, we don't have a whole lot of important data. We do have German trade balance, and this will be important for the euro because Germany is one of the largest economies there. So we do need to pay attention to this, even though it's yellow. And then the sentiment number, investor confidence number, is always an important number, and especially when there's not a whole lot of other important news, it will have an impact. And then we also have consumer confidence number for Japan here, and especially with everything that's going on in the equity markets, Japanese yen has become an important currency to watch these days, so keep that in mind. But in New York, we do have business outlook survey from Bank of Canada, which will be important for a Canadian dollar. And then on Tuesday, for the US here, PPI numbers, this is a precursor for retail sales. So this will be important. So PPI and core PPI number will be important here. And then we have Governor Lau speaking. And also for China, we have CPI and PPI number. So this one is... again, a precursor, CPI inflation number is very important. And we'll have to keep this in mind because it will have an impact on Australian dollar and New Zealand dollar because those are the biggest export partners with China. So if China does well, those currencies will do well. If China's numbers start to go down, then those currencies feel the impact as well. We do have RBA Governor Lau speaking. So with Australia, we saw that RBA did not raise rates, and right now they're holding a neutral stance at the moment. And as a result of that, anytime we have RBA, anybody speaking from RBA, it will be important because market will basically be looking out for signs of any change in monetary policy coming up. So usually RBA, Reserve Bank of Australia, Reserve Bank of New Zealand, Canada, these are countries that tend to follow closely behind the US. And usually they have higher interest rates than the US does. However, we are seeing a change there right now, a big shift that we haven't seen in quite some time. So keeping an eye on comments from RBA will be very important. We also have President Draghi speaking for ECB. Again, anytime there's central bankers speaking, that will be important. For the US, we have CPI and core CPI. So these are inflation numbers. This is one of the big numbers that the central bank, Fed, will track. And right now, it's not really going up. So it's at 0. It's supposed to be, normally the banks want it to be higher, between 2 to 3%. The inflation has been rising very slowly. And now the concern also is, or actually not the concern, but something to keep in mind is if we do have trade wars, inflation will go up. So inflation will become an important number to watch as we move forward. As inflation goes up, that puts pressure on the central bank to raise rates, and Fed is already raising rates. So they're concerned about this number at the moment. If it doesn't go up, then the rate hikes may not come as planned. So that's why it's important to pay attention to this. Crude oil inventories, it's important for both US and Canadian dollars. FOMC meeting minutes, very, very important here. Again, we'll be looking at what the Fed says. Are they going to continue raising rates? They're not going to raise rates at this meeting. This is just the meeting minutes. But are they going to continue raising rates? Generally, they raise rates when there is a press conference scheduled after the meeting. So this will be important. because really the market is only looking to see how the Fed is feeling, especially with trade wars coming into play, with the state of the equity markets. All of this will have an impact, and it's important to see how the Fed will react from that, even though it doesn't have anything to do with monetary policy. The Fed still has to watch out for these things because they will impact the economy. So anything FOMC related will be very, very important. And then Bank of Japan, another central banker here speaking. And Japanese yen, like I mentioned, with the turmoil in equity markets and with trade wars looming here on the horizon, Japanese yen has become very important. And the problem with that is for Japan is that when their currency is expensive, it becomes more expensive for them to sell their stuff. And as a result, their exports will go down, and they don't like that. So a lot of times what we'll hear is, we'll have these officials, they will try to talk their currency down. And that's why the comments are very important, because they may actually not do anything. They just say stuff that will have an impact on the market. But just saying stuff is actually important because it will move the prices. So it's very important to pay attention to these speeches when they are due. And then we have another central banks, a lot of central bankers this week. So just be mindful of that. There can be a lot of volatility in the market as a result. We have ECB monetary policy meeting minutes, just like the Fed, FOMC there. These will be important. And again, so ECB is sort of at that point where they are doing a shift in their monetary policy. They have started cutting back on their asset purchase program. So what the market will be watching for will be to see if they're going to continue doing that. Are they going to continue cutting back on their monetary policy and cutting back on the asset purchase program, or are they going to reduce that, increase that type of stuff? So that will be important. They're not looking to raise rates at this point. So there won't be too much around that. And ECB has been reluctant to give any forward guidance in terms of interest rate hikes. But market will always be paying attention to that because Eurozone has been doing well. And as a result, there's pressure on ECB to shift their monetary policy. And then we have Bank of England, Governor Carney speaking. So there's another central banker there. RBA financial stability review will be important. Manufacturing index for New Zealand will be important. Of course, trade balance is always important. And we have consumer sentiment numbers. So there's a lot of, there's 2 or 3, actually 4, almost 5 actually. So we have RBA, FOMC, ECB, Bank of England, Bank of Japan. So there's a bunch of central bankers on the tap. So just be mindful of that. And it's important to have an audio feed on so you can see what they're saying and how it will impact the markets. Let's move on to our charts now. So as we see here, this is Euro dollar weekly chart. We have been in this sideways move for quite some time. Last week, we had a very nice weekly pin bar. We were looking for Euro to drop, and it did. But then we have bad non-farm payrolls number coming out that came out. And as a result, we have seen this push up. So overall, the bias is still to the downside here within this range-bound move. I'm looking for price to move towards the bottom here. If it does that, because it hasn't quite broken this low here. So if it doesn't break the low, then we may see price push back up again. So we could see one of these, basically price rejecting the bottom of the range and moving towards the top of the range. So bias for this is range bound for now. And I'm looking for price to go back into the middle of the range and even start trading towards the high of the range. And of course, FOMC meeting minutes will have an impact on this. So bias is range bound for euro dollar. Pound dollar here, we had a bias to the downside. It dropped a bit, but now it has gone up. But as we can see, this is also in a sideways move here. However, the difference between euro and the pound is the pound has been a little bit more bullish compared to euro this week, especially. So we have seen price push up and closed in a bullish candle, as a bullish candle closed here. So as a result, I'm looking for price to move up back into these highs again. So the target would be 1.4250 level. So looking for price to trail up towards the top of the range. But otherwise, we are still in this range-bound market. But we have this positive trend line going here with the pound, and prices are being pushed up. So I'm looking for price to go higher for pound dollar. So bias is to the upside. Aussie dollar here. Aussie, we had a bias to the downside, but this week price has just, it pulled back and then dropped, but it just closed right in the middle. So with this one, the overall bias is to the downside, but the candle close here is bearish to neutral. So I'm looking for price to drop here. So the type of move I would be looking for would be something like this. Price goes up and then pulls back from there. First target would be 76.50, and then looking for price to come back into 7,600. So looking for price to retest this previous support resistance level at 77.20, and then looking for it to drop into 7,600. So bias for this is to the downside for Aussie dollar. New Zealand dollar here. New Zealand dollar was a little bit more bullish than our Australian dollar. But in terms of the move here, we had this doji here, and now we've just seen price push back up. But this one is kind of in this sideways move as well. So if we take a look at it for several weeks here, price hasn't really done much. It's just go on sideways. Did try to break low here, but hasn't really succeeded, so it's gone sideways. So at this point, I'm looking for price to perhaps push up a little bit higher and then test the high of the range and then come back into the middle of the range. So New Zealand dollar is also a range-bound pair at this point. With the way the candle has closed, I'm looking for price to push up higher, and the target here would be 73.50, and then move back into the middle of the range from there. So looking to trade the high of the range, selling at the high and buying at the bottom, because I'm looking for this type of a move, selling at the high and buying at the bottom, because it is a range-bound market. Okay, so here, this is dollar CAD. We had a nice pin bar. Price dropped a bit, then it has pushed up. So the non-farm payrolls has caused things to push back up. Canadian dollar actually took a hit also because we had negative data. There was negative data that came out for Canada. So this has pushed back up. But overall, it's staying below this previous support and resistance level. So if the price stays below this, then we could see the price drop again, because overall the bias still stays to the downside. We could see a move like that. So I would be looking for 1.2800 and see how price moves there. Because if price rejects this level, then I'm looking for price to move to the downside here. So bias for this one is to the downside, and the target would be 1.2720 level to the downside. Okay, next one, euro pound here. Euro pound has been bearish here, so it's trying to break below the range here. It has been sideways for the last few weeks, and now this week it was quite bearish. British pound went up and euro moved down, so as a result euro pound dropped as well. So with this one, we are into support. So this support price hasn't been able to break this support for quite some time. Now it has closed very much into the support, which means there's pressure to the downside. So we could see price drop here. The target would be 80 level back into the bottom of the pin. However, one thing that we would have to really take a note of would be a break below this 87.20 level, so 0.8720. If the price holds below this level, then we would see price drop. Oops, sorry. Let me just clear some things out here. I have been marking up charts. Actually, I was looking at a daily chart. So let's take a look again. Okay, so the bias is to the downside. And so the fact still remains that we are into support, but price has closed quite, is pushing into it. So which means we'll go lower. And 86.50 will be the first target here. And below that, we are looking at 8,600. So bias is to the downside, but we do need to make sure it stays below 87.20 because that will show that show the continuation to the downside. So the bias for euro pound is to the downside. Euro Swiss franc here, we are pushing up higher. Price has been pushing higher for the last couple of weeks here. It's very slow move, so it's not huge. But as we can see right here as well, there were small candles, but it's still pushed up higher. So bias is to the upside. 1.1830 would be the first target to the upside. And then beyond that, we have this 1.1950 level, which is quite far away at this moment. And there isn't a whole lot in between. Okay, so for now, the bias is to the upside. So first target would be the previous high at 1.1830-ish level. And then if we see a break of that, then we'll start moving further into this 1.1950 level. But before that happens, we have to make sure the price actually breaks the high, pulls back, and then goes up. Because otherwise, it could start doing this double top formation here. We could get double top. So double top is something we would have to watch out for. But for now, the bias is to the upside. First target is 1830, second target 1950. Pound Swiss franc here. This one, the bias is quite a bit to the upside. We have gone into this next support and resistance level here. Price has closed quite bullish into it. Next target would be 1.3620 level. And further up, we are looking at 1.3700. So bias is to the upside for pound Swiss franc. Dollar Swiss franc here, we have seen bias to the upside here, or we have seen a move to the upside here. So bias is bullish. As we can see, we have this little trend line going here, and price has steadily been pushing up. So it has managed to clear this previous resistance level that it was struggling with. Now we are into this next support and resistance level, and price has bounced off of that. So overall bias is to the upside. First target would be the high again, 96.65-ish level right here. Now with this one, just like with the other one that we just talked about, we have to be careful that we don't get one of these, so double top. That's something we'll have to watch out for. If the price is not able to break above 96.60 level, then we may not be able to get a trade to the upside. But otherwise, if it breaks through 96.60 level, holds above that, then we're looking for a move to the upside. But overall, there is still bullishness in this, so we could get another move into the high, and then we could get a double top as well. So be mindful of that. Bias still remains to the upside for dollar Swiss franc. And let's get into the yen crosses here. With the yen, we are pound yen. We are pushing up right now. Looks bullish at the moment. Next target would be 152.80 level, and then almost 155. 154.50. So those are the two targets we're looking at to the upside. This one has a trend line that is pushing up here as well. Not a huge move, but we do have that pressure to the upside at this point. So with this one, what we could see is a little move like that. So 152.80 will be the first target, 154.50 second target to the upside, but the bias is upwards there. Euro yen. Euro yen is looking bullish here. We are pushing into this huge resistance, and price hasn't been able to break above that. So bias is to the upside, and with this one, we'll have to be careful, because if price cannot break the high, then we could just turn around from here, because euro has been bearish. But overall bias is to the upside, and this is the type of move we'd be looking for. Price breaks out, pulls back, and then goes up again. So again, bias for euro yen will be upwards. This one is dollar yen. Dollar yen, the bias is upwards as well. We are into this support and resistance level that the price hasn't broken in quite some time. And as such, we could see a drop right from here, like that. However, the bias is upwards. We are pushing upwards here, so it could break out, pull back, and then go higher into 108.80 level. So again, bias is bullish for dollar yen, but we do need to see a break above the high of 107.50 and then a continuation to the upside. But if 107.50 fails, so if price stays below 107.50, then we can see it come back into this range here. So it could just come back towards the bottom of 105.20. But at this point, the bias is upwards. Aussie yen here. Aussie yen is looking bullish as well. As we can see, here we are. Again, we are into resistance here, and price has reacted slightly here. However, we could see a break because we have closed bullish. So this is bullish to neutral for Aussie yen. And the test, again, will be the high here. So price goes and tests 82.50 level. If it stays below, then we're looking for a move back into this range towards the bottom of 80.50. However, if it breaks above this, then we're looking at 83.30 level and potentially even higher, all the way into 84.00. So though that's the plan for Aussie yen. CAD yen. CAD yen has been bullish. It's moving upwards. So the bias here is bullish, and looking first will be a retest of 87.50, then looking for a move higher into 85.50 level. So bias is to the bias is bullish for CAD yen as well. All right, so that's all I have. Any questions or anything to add here? Okay, let's take a quick peek at gold, actually. Let's take a look at gold and oil as well. Okay, gold has been range bound as well. So we had a bearish move here. We were looking for price to drop, but price has actually gone up. And a lot of that has to do with equity markets kind of shuttling back and forth. So gold normally has an impact. It's a safe haven asset. So when equity markets start going crazy, gold, when they drop, gold tends to go up. And that's why we have seen that move to upside. Okay, so with this one, the price has still made a lower high. So it's constantly making lower highs here, even though it has pulled up. We have a lower high. These highs have been lower. So with this one, I would look for something like this. Price pushes up and then moves back. And the first target would be this bottom of this previous pin here. So let's get some numbers. So I would look for price to push up into 1340 and then go back into 1318 and even lower into 1312. So because of that overall bearish bias, I'm looking for price to push up and then drop first into the bottom of this pin and then into 1312. So that's gold. Let's take a quick look at oil. Oil has been dropping here. So let's take a look. Big drop in oil. And now so this is bearish. Oil looks bearish, which means dollar CAD could push up. And this is the type of move I would be looking for. Or the second target will be at the bottom here. So about 60.80 and then 60. This will be the target to the downside. So 60.00, and then but it could push up higher first into 62.75. So something like this. That will be the move, but it looks like a evening star formation here, which means we're looking for a pullback and then a drop here. So bias is bearish for oil. Yeah, we had a double top in oil, very nice double top in oil right here. And since then it has dropped. So we have this evening star formation. Last 2 weeks it has dropped. And now, so I would look for price to basically pull back up either into this pin or into this pin, which are very close to each other, and then do one of these moves to the downside. But overall, it looks bearish at the moment. All right, so that's all I have. So we will call it, we'll close it off here. You guys have a wonderful weekend, and I will see you next time. So actually, there's a question here. What do you think about the U.S. trading war with China and effect on the dollar? With the U.S. trade war, actually, it's interesting. Markets were taking, so the White House officials had said that they're going to negotiate with China. China was very interested in negotiating with the U.S. And China doesn't tend to make sporadic comments. They take a more of a thought out approach to any of their economic decisions. They have sort of taken over the world. They've bought up the world, and they have been very diplomatically doing that. So at this point, China doesn't want a trade war. So they basically said that we are not willing to back down. So if you want war, we'll give you trade war. However, we don't want that, and we are willing to talk. Let's talk. And it looked like Washington took that. They kind of understood that one of the tactics that, or one of the strategies, I should say, that China is following is we have midterm elections coming up in the U.S. They targeted products that were from states that President Trump won in. So they kind of went about this very strategically. They didn't just announce tariffs. They said they are going to have soybeans and things like that. So the products that they picked are the products that come from states that President Trump won in. So they're putting pressure on President Trump and overall just pressure on the U.S. saying basically we're not going to back off. This is not fair. We're ready to take action, but we don't want to take action. That's essentially their stance. But then they went about it strategically to pick certain products that will really push the buttons, or at least put put pressure on President Trump. So it looked like White House was weighing that in and looked like everything was going to be okay. And the commentary that was coming out of White House was essentially that we are willing to talk with China. We think things will settle down, and we think we'll be able to reach an agreement that works for both countries. But then President Trump tweeted, I think it was on Thursday, he said, he's going to suggest doing tariffs of 100 million. So that's sort of, it went from 50 billion to 100. So kind of went up quite a bit. And that's what has caused things to go a little crazy. At this point, market was down, but we didn't have any sort of looks like it's rolled off here. So we didn't have any impact on Japanese yen. Generally, when markets go down, Japanese yen goes up, but Japanese yen just kind of stayed there. So coming up, it would really depend on what President Trump has to say and how China responds, but I expect turmoil. The smart thing to do would be to back off a bit, and I expect White House officials to try to smooth the ruffled feathers, especially of equity markets. So as a result, how will that impact us? Japanese yen has held up. Surprisingly, actually, I was looking at short. I was looking at short dollar yen, short euro yen, especially on Thursday after that tweet came out about President Trump. About him. Doing the whole, escalating the situation, but it hasn't actually moved down. So euro yen has moved down slightly. If you look at the 4-hour, it's just sat here. And I was actually selling. I was trying to sell it here. It hasn't moved down at this point. So yen is not reacting with the markets at this point. But if the markets do turn really negative, yen generally will respond to that. So we could see the yen crosses basically going the opposite direction. So yen has been shuffling back and forth. In terms of impact on US dollar, US dollar has gone back and forth. Generally, it's considered a safe haven currency, but because US is in the middle of this whole mess, that is not good for the currency, right? So it's a sentiment-driven move at this point. So it depends on what happens. On one hand, equity markets sell off. People will go into the US dollar because a lot of stock, this Wall Street, we're talking about US dollars, right? So people need to buy US dollars to get out of those their stocks. So they have cash on hand. So they're buying US dollars, which will push US dollar up, which means all the crosses will go down. But on the other hand, US is the one who's instigating all these things. So as a result of that, it's negative for the US. So it will really depend on the sentiment. So we just need to watch how it will, how the markets are viewing it. So yen and Swiss franc and gold are good indicators of what will happen. If there's more turmoil in the markets, I would expect those currencies to go up. So Swiss franc pairs will go down, yen pairs will go down, and generally US pairs will go down as well. But like I said, US dollar could go either way depending on how the market sentiment pushes it. But safe haven assets generally tend to appreciate. So gold will go up, and yen and Swiss franc, like I said, all of those will go up. So we'll have to just keep an eye on those prices. That's why gold was up this week because of the turmoil in the market, but then it backed off when White House officials essentially said that we're going to work this out. So just keep an eye on what kind of comments come out. Again, watching the news feed is very, very important at this point. All right, so we'll wrap it up here. You guys have a wonderful weekend, and I will see you next time. Bye for now.